The crash you are about to experience is unlike anything the world has ever seen before.
In 1929, the stock market crashed and erased a generation's wealth. In 2008, the housing market imploded and nearly took the global economy with it. But 2025 is different. This time, everything, stocks, bonds, and real estate, is cracking at once. The signs are flashing red, the patterns are identical, and the tools that once saved us are gone. Welcome to the everything bubble, where history isn't just repeating, it's escalating. Chapter 1. History doesn't repeat, it warns. In 1929, the stock market crashed, wiping out 89% of its value over 3 brutal years. Banks failed, savings vanished. 1 in 4 Americans lost their jobs, and it took 25 years for markets to recover. Fast forward to 2008. The housing bubble burst, stocks plunged 57%, and 10% of the workforce was unemployed. Trillions evaporated overnight. Each time, the system barely survived, patched together by bailouts, cheap money, and luck. But now, those same lifelines are gone, and the storm forming in 2025 makes both crises look like warm-ups. Chapter 2. The Everything Bubble. 2025 isn't just another market correction, it's a perfect financial storm. For the first time in history, stocks, bonds, and real estate are all inflating together, fueled by cheap debt, speculation, and denial. Economists are calling it the everything bubble because when everything rises at once, everything falls together. There's no safe haven left. The warning lights are blinding: overvalued assets, record debt, and exhausted government tools. The crash window? November 2025 to June 2026. The mathematics are cold, the indicators precise.
And when this financial bubble bursts, there will be nowhere to hide.
Chapter 3. The tools are broken. In previous crashes, the Federal Reserve and the U.S. government had weapons to fight back: lower interest rates, print more money, bail out the banks. But in 2025, every one of those tools is dull. Rates can't be cut to zero, they're already close. Printing money caused the worst inflation in 40 years. And the government? It's buried under $36 trillion of debt. The rescue options that saved Wall Street in 2008 are off the table. This time, when the system cracks, there's no safety net, only gravity, mathematics, and panic. Chapter 4. 3 bubbles, 1 explosion. Every past crash came from a single bubble: stocks in 1929, housing in 2008. But 2025 is unique because we're sitting on 3 bubbles inflating at once. Stocks are priced for perfection, real estate is more overvalued than before the Great Recession, and bonds, the supposed safe haven, are collapsing under record government debt. Each one is dangerous on its own. Together, they're a financial time bomb. When these markets finally crack, they won't just fall. They'll pull each other down in a chain reaction the world has never seen before. Chapter 5. The Fragile Giant. The stock market looks unstoppable on the surface, but underneath it's held up by 7 companies: Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla. Together, they make up nearly 1/3 of the S&P 500's total value, an imbalance not seen since 1929. When a few stocks carry the entire market, stability is an illusion. If even one of these giants slips, the shock ripples through every index, every portfolio, every retirement account. This isn't diversification, it's concentration disguised as confidence, and it's setting the stage for a collapse faster than anything in history. Chapter 6. The AI Mirage. Nvidia has become the poster child of 2025's insanity. Valued at over $3 trillion, it's now worth more than the entire German stock market, Investors are paying $65 for every $1 the company earns, all because of blind faith in artificial intelligence. It's the same story as 1999, when everyone believed the internet would change everything, and it did, just not for the companies people bet on. The AI boom isn't a revolution, it's a rerun. Speculation dressed up as innovation, with history quietly whispering the same warning. Bubbles burst louder than they grow. Chapter 7. The Crumbling Foundation. Beneath the glitter of record home prices lies a disaster waiting to unfold. Housing is now roughly 50% above its historical trend, making it even more overvalued than the 2008 bubble that nearly destroyed the global economy. But this time, the danger isn't just suburban mortgages, it's towering downtown offices standing half empty. As leases expire and remote work becomes permanent, commercial buildings financed at 3% interest are being refinanced at 7 or 9. The math doesn't work. Defaults are coming, banks will bleed, and the concrete pillars of the economy are already cracking. Chapter 8. The Safe Haven That Isn't. Bonds were once the anchor of safety, the place investors ran to when everything else fell apart. Not anymore. In 2025, government debt has become the problem, not the protection. The United States owes over $36 trillion, and the annual interest alone now exceeds $1.2 trillion. More than defense, more than Social Security. Every new dollar borrowed pushes rates higher, feeding a vicious cycle of debt and inflation. When the risk-free asset itself starts collapsing, the entire financial system loses gravity. Bonds can't save you this time. They're sinking with everything else. Chapter 9. Echoes of 1929. In 1929, everyone believed technology had made crashes impossible. In 2025, we're telling the same story with AI. Margin debt is at record highs, stock ownership is universal, and the top 1% controls a third of all wealth. When the market breaks, half the country loses savings overnight. The difference this time? No one's on the sidelines. The illusion of safety through index funds and diversification will vanish in days, proving that history doesn't repeat, it just updates the software. Chapter 10. Built on borrowed time. Debt is now the foundation of everything. Corporate profits, housing prices, consumer spending. Auto loans stretch 7 years, credit cards charge over 20%, and corporations are leveraged beyond reason. When interest rates doubled, the math stopped working. The entire economy became a balloon held up by IOUs. $600 trillion in derivatives hang over global markets, waiting for a single shock. The next crash won't start in one sector. It'll detonate everywhere at once. Debt isn't just a problem anymore. It's the business model. Chapter 11. The Domino Moment. It won't begin with panic. It'll begin with a headline. A tech company misses earnings. A regional bank pauses withdrawals. Then algorithms take over. Margin calls hit. Institutional selling cascades. Within days, trillions vanish. The Fed can't cut rates without reigniting inflation. It can't hold steady without deepening collapse. Every option triggers another crisis. The machine runs on confidence, and confidence is the first thing to go. What follows won't be a correction. It'll be a reckoning powered by automation and fear. Chapter 12. The Reckoning. When the dust settles, it won't look like a recession. It'll look like reset. Stocks down 70%, homes down half, retirement savings erased. The safety nets will tear, and the middle class will find out how thin they were. The real damage won't be financial, it'll be psychological. Trust, once broken, doesn't recover quickly. The world learned that in 1929, forgot it by 2008, and will relearn it in 2025. The everything bubble was never about money, it was about belief, and belief is the last thing to fall.